Hi students, O-Levels Online presents the video lecture series for other adjustments of financial statements. In this video, we will discuss the prepaid income, definition and explanation. This video series is helpful for those students who are appearing in Cambridge O-Level upcoming exams, either in June or November, through CAIE or IGCSE or IGCSE, 9-1, for accounting 7707, or 0452 or 0985. Let's begin the lesson material. In this slide, we will discuss what prepaid income is. Prepaid income, also known as unearned revenue, is a concept in accounting where a business receives payment for goods or services before they have been delivered or performed. This creates a liability for the business because it owes the goods or services to the customer. Let's move on to discuss the nature of it. The nature of the prepaid income would be the liability. It represents an obligation for the company to deliver goods or perform services in the future. Further, it referred as deferred revenue because it is categorized as a liability on the balance sheet because it is money that has been received but not yet earned. Let's move on to check matching principle. The concept is based on it. Once again, the matching principle must be applied so that the amount transferred to the profit and loss account represents the income for the accounting period covered by that statement. Let's move on to check the accounting treatment of prepaid income. Obviously, it has two stages. Firstly, at the time of prepaid income, the entry would be cash or bank debit, and prepaid income credit. Secondly, at the time of receipt or realization, the entry would be prepaid income debit, and earned income account credit. Let's check the impact on financial statements. In the balance sheet, it appears receivable under current liability, reflecting the amount collected in advance without delivering the benefit yet. So, current liabilities are increased. In the profit and loss account, prepaid income is reported as revenue, contributing to the net income of the period in which it is earned. So, net profit reflected increments in it. Let's move to check its common examples. The common examples are subscriptions, service contracts, prepayments for goods and services, deposits, tuition fees, annual insurance policy, conference fees and annual software licenses fees. Positively, you got the clear understanding of the topic discussed as per the examination point of view. If you have any questions regarding the discussion, kindly ask in the comment section of this video. You can download all the formats and lesson material through the link provided below. Thank you for watching. I hope you learned something new today. If you did, like and share video with other people to learn from it. And please subscribe my channel if you want to see more videos like this. Take care of yourselves. I'll see you in the next lesson. Goodbye.